Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, Thursday's action here, we were up, hitting new all-time highs, folks, on all four of the major indices. That's right, you heard that right. Even the NASDAQ now popped into new all-time highs. Dow was up 65, S&P's up 5, NASDAQ up almost 23, 24 points, but the standout performer, look at the Russell, up almost 22 points. Folks, that's almost like a 1.6, 1.7% gain on that index there, just rocking out on the Russell. We had the crude bouncing off of some lower levels. Again, I've talked about how the crude setting up potentially for a much higher break, and then the gold here kind of just settling off into the 1170s, and bonds as well settling out into the lows. But we'll see all of this on the charts, and as always, we're starting off with the S&P 500s. So folks, there it is, another day, another all-time high, and there it is on the S&Ps, breaking out from these 2214s here. So one of the things that we've got to look for at this point, one is if you are going to encounter any sort of selling, you want to stay above these prior lows, right? So right around these 22 14s. If you do pull back, you want to try and stay above there, because as we've mentioned before, any time that a prior resistance point is violated back to the downside, that starts to put in question the validity of that breakout. So folks, at this point, when we look at the charts and we see prices up to like the 2250s, 2240s, that is an area that is very positive, and we have to maintain those 2214s that we broke out of just a couple of days ago. Now, one of the things that I was mentioning also is with some of this, double bottom and high handle setups that I've been seeing out there, right? Because here's like a double bottom on the S&Ps, and then you've also got like a little bit of like a high handle setup here as well, a high handle breakout. One of the things that I have been seeing across the board here, like if you take a look at some of these stocks that we've been watching, look at your setups that you're seeing stocks breaking out of, right? These are the setups here that we've been mentioning here, right? High handle setups. And that's partially due to the fact that the S&Ps are doing it. The Russells have already broken out and have extended huge gains here off of its high handle, and even like the Dow Jones. A lot of the financials and industrial stocks will actually look like this. The high handle on the Dow Jones broke out almost 2 weeks ago, right through those 19,000 evens. So look at that, folks. We're at Dow 19,614s, and again, one of the things I mentioned is it probably won't be too long before you start hearing people clamor about Dow 20,000. That's only about 400 points away. That's only like one good day away, potentially like a nice 2.5-3% move on the day, and you're there. So just kind of keep that in mind. That's where we're getting into. But also when you look at this Dow chart, and also when you look at the Russell chart, it starts to feel like we're getting a bit extended, maybe a little bit frothy, and that's something that you're going to have to be careful of when you're trading stocks. Now for us, we're only buying stocks when they break out of recognizable chart patterns. But again, as I mentioned on prior videos, one of the things I'm seeing or not seeing is a lot of recognizable chart patterns. A lot of things are extended, and really I think the best thing that could happen for the market is for us to go sideways and allow these stocks to build some bases. That's going to lead to a whole fresh batch of breakouts down the road. Now earlier I had mentioned the NASDAQ just hit a new all-time high here up and over the 5400s. That's that century mark as well. We had a pickup in volume, although overall the NASDAQ has been relatively weaker than the other three indices. This is the last of those major four to hit a new all-time high. So just like with the S&P, the thing I'm going to be looking for on the NASDAQ here is now that we've broken the 5400s, we've got to stay above it. Any fade, or I should say trade down below, or a fade of that move would, for me at least, tend to put those new highs in question. To me, it's like, well, why can't you stick it and hold it? Are there that many sellers that are causing it to come back down, who are basically eager to sell anything up into new highs? So that's kind of the thing I'm looking for here on the NASDAQ. Although we did see kind of a nice day in some of our major techs. We saw like the Facebooks and the Alphabets. They got a nice day, but what you can see here, they're just carving out some bases, like on the FB or even on the Alphabet here, just carving out some bases, trying to get back above some whole numbers, back above some moving averages, that's all. So if these can form some bases and then these big mega cap tech stocks break out, I I think that that could give some legs to the NASDAQ. And again, as we're looking at charts here, these are not buy, sell, hold recommendations on any of these securities or indices. It's just, again, we need to use these for demonstrative purposes, for illustrative purposes, and in terms of what we're seeing in terms of chart patterns. All right, so let's move over to some of the external markets here. Taking a look at first the bonds. As we mentioned here, bonds have been weak, kind of somewhat balancing out though. Also something to keep in mind, we've got the FOMC rate announcement coming up next Wednesday. Also taking a look at the crude here. Actually, let's take a look at the gold first. Gold somewhat balancing out on these lows as well. I've been mentioning in our trading room how it does seem that the gold is trying to put in a bit of a bottom. And again, the only way we're going to have confirmation that maybe the bottom is in is if it can break above these 1200s. The longer it stays down below these 1200, it seems like there's still maybe some sellers waiting in the wings, keeping pressure on the gold. And then finally, as we move over to the crude, okay, the crude kind of stopping where we needed it to stop. So it tried to break over through the 52s and then got rejected. So faded all the way down into these 50s. One of the things I told our room, and what I've mentioned in prior videos, is we have to hold these 4920s. Those are prior resistance areas. And again, just like with any breakout, you've got to hold those breakout levels, else the breakout starts to look like a false breakout. So far we broke out from the 4920s, we got to 52s, rejected. Now it starts to look like we're forming almost like a bit of a handle here, right? For those of you who know chart patterns, kind of like a high handle that's forming here, kind of a descending trend line. So look for a break coming up during the trade of Friday or even next Monday. Look for a break above the 51s to maybe confirm that maybe the crude is trying to break higher and break above those 52s. Remember, 52s represents that neckline we're talking about in this inverted head and shoulders. All right, so as we move back to individual equities here, one of the things I just wanted to mention is as we're taking a look at stocks here, a lot of our stocks are extended, but we are still finding some nice setups. Some of our existing swing trades, you can see here that we've been in them for quite some time. Right here, some breakouts. We're in this for like 6-7 days now. Another one that we actually just recently took, working out really nicely. What pattern do you guys see here? Right? That's a high handle. Another one here, TSEM, working out nicely. What do you guys see here? That's right. It's a high handle. So, the reason why we point these things out on the major indices is because these are the things that we're actually going out there and trying to trade in terms of chart pattern setups. Here's a new one that we just actually took today, FOE. Kind of forming a little bit of like a flat base and then another high handle breakout above this. So again, I have to mention these are not buy, sell, or hold recommendations on any one of these individual stocks. But what we have to make very clear is no matter what you think of the market, whether you think it's overextended or overvalued, it's overbought, ready for a pullback, folks, you've got to just go with what the charts on the individual stocks are telling you. If there's a setup there, apply your risk management rules, and you've got to look for that trade, right? The breakout on volume, and that's exactly what the FOE had here. In fact, as I look at this, here's another thing you guys can be doing on your own is look at where the groups are, where the strength is coming from, like this chemicals. One of the things I noticed is a lot of these chemical stocks have been getting a bid, like this ALB breaking out here. Another one is this TSE. This is another chemical group, right? So all of these as a whole are starting to get a bid, and so that's where you start asking yourself, do I see any recognizable chart patterns? Are these trading up near 52-week or 5-year highs? And if so, then where's my buy point? Can I find a buy point? And then do I have some kind of a risk management or a trading plan in place to then go and apply when I actually take those trades? Another one that we actually hit today for a nice little day trade was this LITE. We saw it breaking out on volume. We actually took this here right through these right through the 42 right through these 42.40. So right off the morning it just ripped up, just no trade entries, right? But you wait for it to come back in, form a little bit of a setup, kind of like a cup and handle. Some might even say that that's kind of like a high handle there. But right through here, 42.40s, a nice little pop up into the 44 evens. We were scale out sellers, and that was a great little day trade that we had going on there. So folks, again, even though the markets are up on highs, new all-time highs, you have to remember that ultimately is a good thing. The only way you go from Dow
10,000 to Dow 20,000 is you have to continually hit new highs along the way. So just look for the very best setups out there. And again, that's always one of the things I've mentioned on these videos. The game plan always has been, always will be for us, looking for the best relative strength stocks, breaking out of recognizable chart patterns, and on volume. But other than that, folks, just wishing everyone a great trading day ahead, and join us for our next market trend review.
Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.